Okay, hello everyone, welcome back to my channel. Before I start, I'd like to say I am not a financial advisor and everything here is for entertainment purposes, and please do your own due diligence. Okay, and for those of you who do not know, my name is Ali. I have over 20 years of experience teaching business, accounting, economics and law. I would like to, through this channel, use my experience and insight to increase your knowledge, improve your strategy and reduce your risk. At the end of each video, I will also be offering a 5-minute short lesson on trading strategy, trading skills. So hopefully that will benefit everybody. Okay, so a quick recap from the previous video. I talked about diversification and the importance of having a variety of different shares. Today, I'm going to be looking at trading mistakes. I'm going to be sharing my biggest trading mistake with you later on. And first thing I'm going to do now is share my first stock analysis. Okay, so the first stock analysis, Clover Health Investments, ticker symbol CLOV. This is a stock I briefly talked about yesterday. However, from the analysis today, I've seen a rise of 3.85%, and also after hours, it's currently trading at over 3%. I think this stock is now ready to move. This was the stock that recently merged with IPOC. Having a look at their website and in the investor analysis section, we can see that this stock is worth £270 billion. Going forward, if you look at the valuation in 2025, according to the investment analysis by Clover Accounting investor analysis page, it's going to be worth £590 billion. So there's huge growth potential. And what really I found amazing was this next information that they provided. Currently Clover are providing their services in 34 countries, and within this next coming year looking to expand that to 108 countries. So there's huge growth potential here with Clover. So it's currently experiencing a little bit of growth in the price. A small dip tomorrow could be the ideal opportunity to take advantage, and this is a share that I would hold for the medium to long term for sustained growth. Okay, my next stock analysis I'd like to share with you today is ticker symbol ORGO, Organogenesis. This is a stock currently trading at $9.49. Today, this is a stock I believe is going to benefit immensely with the new Biden administration. It's an organization that is involved in medicine, organic treatments, surgical and sports healing solutions, medicines, and it's a medical company that could also take advantage of therapies using cannabis. And this is something that the Biden administration is going to be more positive towards. If this is legalized and cannabis is used in these medical outcomes, then there's a huge potential for this stock. It's not on the radar of a lot of people. The expert analysis of 4 analysts is 3 of them rated it as a strong buy, 1 of them rated it as a buy. The price target on the high is 14, and this is by the analyst, but I expect this to 2 to 3x. Today it closed at minus 0.11% down, but over the week it has run up 28%, 57% over the month, and 148% over the year. I would recommend a buy price anywhere around about $9.20 or around about $9. If you catch this at $9, I would move and certainly hold this for the long term. Okay, so from a financial point of view, this stock has also had significant gain in revenue. The revenue increased 24% to 231 million. They have a market cap of 974 million, which is potentially could explode as I said, with the new Biden administration, if we look at their income statement and their balance sheet, we can see that growth was 34% in the revenue, and in the balance sheet we can see the company is also healthy from the point of view of assets. So this indicates that the company is in a strong position to pay any liabilities and survive in terms of uh, difficulties if it came to things like administration, payments, etc. Okay, so lesson number three. As you can see, lesson number three is about trading mistakes. So the mistake I'm going to talk about today is never chase. So never chase a share. Always aim to buy a share on the dip. Always aim to share when you buy the share when you believe it is at a good value. Whenever you chase the shares, in terms of the price going up, it is a very, very risky strategy. So this also led to my biggest mistake in trading. This happened on the 9th of December 2020, just last month. And this was with a company called GLSI, ticker symbol GLSI. This company did something absolutely incredible, never ever seen before in the history of trading in my entire life and in the entire experience of most investors on the stock market. This company, on that one day, on the 9th of December 2020, actually ran up more than 2,500%, and that's in one day. Companies do not achieve this growth, phenomenal growth, in 10 years. They don't achieve it in 20 years. And I'm talking about huge multinational organizations do not achieve this level of growth. But GLSI on the 9th of December achieved a phenomenal growth in excess of 2,500%. What this meant was the initial price of GLSI was $5.49. In the pre-market, it shot up 400%. So that is a lot. 400%. I mean, that gets everybody's interest, including mine. So what happened on this day? I made my first investment in GLSI at $24.80. I then sold at 10% profit at $25.40. Quite happy with that. Checked it again. The price went down. I rebought at $25.10. Then I sold at $28 again. Around nice approximate 10% return again. And then checked a while ago, and this time the price went up to $89. This was it just was not going down. So this time I made the mistake of chasing. So this price was not going down. I mean, 2,500% return is unheard of. So there was no stopping this share. So again, this time I bought at $89. But my mistake was something that hopefully you can learn from. And the mistake I made was trusting the stop loss on trading 212. This could also happen on Webull. This could also happen on Robinhood. The stop loss, I later discovered, does not work on extremely volatile shares with a huge amount of volume. I trusted the app, I trusted the software, but it let me down. So as soon as I purchased these shares at $89, I used the stop loss like all advisors will tell you to do, and that is your backup, that is your safety, that you do not incur losses more than you specify. So I bought the shares at $89. Have a guess what happened next? The shares shot up to $158. So I purchased them for I purchased my shares at $89. They've gone up to $158. Well, absolute euphoria, absolute excitement. But my mistake is I did not sell. So the mistake I made was not selling. So I've bought $89 shares. They've gone up to $158, and I'm trusting the stop loss. I'm saying, well, if they go down, I'll cash out, automatic profit. But little did I know that the cash out would not work. After this, when it went up to $158, it just stayed there a few seconds. I think all the investors just cashed out then. It came rocketing down, and it then from $158 it came straight down to 157. Sorry, not 150. It came straight down to $57. I had to sell because there was a risk of it going to $5, $10, $20. It was just we're in an unknown territory. So this led to my loss of about 64% of my investment, which was quite significant loss. So the lesson to be learned from here is A, never chase, and B, never trust the stop loss in extremely volatile shares. Thank you very much. Okay, so I'd like to finish the video now and quickly finish the video with a quick recap of one of the shares I shared earlier in my previous video, ticker symbol SENS. I'm pleased to say that it ran up more than 76% today, so I hope you guys took my advice and invested a small amount in here, because that is a phenomenal return. And I've just made a very speculative high risk investment today in a company called BANT. I got in around about 2 cents today. Ticker symbol, the growth on this stock is 211%. I will share more details tomorrow. However, the rumors coming through right now to me, they have received an order from the US Emergency Services for drones, and there's speculation of more orders to come. So this is hot off the press, guys. Hot off the press. So no full analysis on this yet because it's brand new. Hopefully I can share more details later. Check back in with the next video.